Hey everybody, this is David McCoy and this is Ochimo Properties Real Estate Matters. So today I thought I'd talk a little bit more. We've talked about a whole bunch of different kinds of rental properties and this is still in line with our series on topics and questions that investors might like. And what I thought I'd talk a little bit about this time is rental properties. And so there are a lot of ways that we can go with this, but in general, and I'm going to take the broad category of rental properties, smaller investors probably, when you talk about rental properties, they are primarily thinking about houses, smaller houses, things like that, that they maybe have bought and are leasing out, or perhaps some small multifamily like a duplex or a fourplex, those kinds of things. And we could really talk about those individually, but I'm really going to take the broader category of rental properties in general. So from, smaller houses like I just mentioned, on up to giant, industrial buildings. We have in our market, I think last time I recall, I don't think we've had anything new built bigger than this. We had a industrial building that was 1.2 million square feet. And that's huge. That's huge. When it was built, there weren't a whole lot of million-plus square foot industrial buildings in the U.S., but now there are a number of them, and some much larger than that. But when you have a rental property and you're trying to set the rent, or if you have it for sale and you're trying to set the price, those things actually have a relationship. Now, and so when people are talking to me about those kinds of things, if that relationship doesn't quite fit, if the rent that they're charging versus what they want to sell their property for don't correlate, then that ends up, that's one of those things that it just usually won't work. Because each of them have to have that. So in general, there is a relationship in terms of like your annual rent less expenses. And we talked before about rental properties having a cap rate. And so that cap rate is the return that you would get. So the price of the property should be related to what you're getting in the return of that property. If it's not, then it just doesn't really work very well. So it's not super complex, but it's a little more complex than I would go into right here. But suffice it to say, when people come and they talk to me about properties like that, I usually have to sort of do a calculation and say, is this reasonable? And so that's one thing when you're setting prices or rents, either way, you kind of have to think about the values involved and see whether or not it makes sense. All right, I'm keeping it short tonight. I'm wearing my Bike to Beat Cancer shirt. I think I wore it once before. It's one of my favorite charities. It's a weekend, so I'm dressed down. And so if you want to, support Bike to Beat Cancer. In the meantime, if you like this video, please click like. If you know someone who might benefit from it, please click share. And if you want to see them in the future, I hope you will hit subscribe. And thanks very much. Have a good evening, and I will talk to you next time.